Good afternoon, everybody. Uneducated Economist here. So in this video, we're going to be talking about how the tariffs backfire and how they don't really work. Ultimately, anytime you find that the government is moving into sanctions or tariffs or any kind of move that tries to limit the distribution of one nation's goods and services to another nation's goods and services in order to try and maintain the economic power that has been produced from the manufacturing of that particular country, you're going to find that there's going to be issues that arise from that were unforeseen. And now what a lot of people are kind of stuck in is the idea that if you just have the government inflict a tariff or a sanction or something like that, like the rest of the world is just going to sit there and take it. Like, that's not going to happen. What you're going to find is that there's going to be new avenues of distribution, whether a manufacturer pops up in another nation or another distribution network or supply chain starts to get established. That ends up taking place when you have sanctions and tariffs and duties and all kinds of political action that take place within the free market. Like, if it wasn't a problem, then the government wouldn't be there trying to deal with it. Like, they're not trying to fix a problem. They're trying to deal with it. Like, they can try and fix it. They're trying to deal with the problem that is natural consequence of the Cantillon effect. And there is no fixing it. They can only try to mitigate or govern or deal with it, but there's no way that they can actually reverse the problem. And now the problem is that when manufacturing becomes too expensive, other nations out there figure out a way to manufacture those goods in a way that is cheaper than what you have, you will lose your competitive edge. The United States faces this exact scenario. People blame politicians all the time. Oh, if they hadn't greed in politicians, right? Greed in the political environment pushed the good manufacturing jobs over to China. I don't know how much I heard that throughout my life. This is such a common statement, and there is all kinds of evidence out there that prove this. Now, understanding that the manufacturing here in the United States had elevated itself up with the people who were manufacturing with a higher standard of living. All that wonderful products that we were producing and sending out there to the world raised our standard of living. China faces the exact same thing today. Right? There is no difference in it. I mean, it looks a little different, right? We have different means of communication and distribution and all kinds of stuff, but the underlying economic force is still there. And it's best to understand it as an economic force as opposed to a political action, because it's easy to blame politics, but it's very difficult to see it for what it really is, and that is the underlying economic force. Now, I left a link down in the description to this article called Tariffs Backfire as China outmaneuvers rivals with global EV investment. Now, I started reading through this article, and it sounds like China is taking on a strategic way of trying to deal with the fact that they are losing their manufacturing base. And so as all these rest of these nations out there tried to figure out how it is that they can manufacture the same thing that China is manufacturing, China is moving their manufacturing base out of China over to new areas. Well, who did that just a few years ago, right? United States. Sounds very familiar, right? We couldn't manufacture here and distribute it out there in a way that was going to be profitable, a way that was going to be efficient. So we ended up moving our manufacturing base out of the United States and over to China. Well, China's doing the same thing. They're moving their manufacturing base out of China over to other parts of the world where it's cheaper to manufacture, where they're not getting hit with the tariffs. The United States faces this right now with lumber. Like, an insane amount of lumber comes out of the British Columbia area, out of Canada. But the United States hits Canada with softwood tariff imports, claiming Canada is dumping cheap lumber into the United States and it messes up our domestic manufacturers of lumber, our mills here. So they blame the fact that they are dumping this cheap lumber into the United States. They put these tariffs on these lumber mills up there in Canada. Canada says, well, no problem. We'll just set up shop in the United States. And now major Canadian mills operate within the United States, avoiding all those tariffs. And this is exactly the same scenario that China is facing. It says here, China is investing in EV factories, battery plants, and all sorts of transition tech around the world. It's building EV factories and battery plants abroad to retaliate. To retaliate? Against a tariff push in the West that may prove to be just as counterproductive as sanctions on Russia. Well, no kidding, right? Is it a retaliation, or is it the natural economic forces that then has this consequence taken place? You can't manufacture in your own nation? Well, you're going to still be profitable if you send that manufacturing over to another nation. Goes on to say, in June, the media reported that the European governments were competing for Chinese financial attention. At the EU level, there was increasingly louder talk of import tariffs as the bloc tried to build its own transition supply chain very much from scratch in a bid to protect local industries from cheaper and superior Chinese tech. Okay. Try to, hey man, we're going to prevent you from actually sending your goods and services to our nation so that we can protect our goods and services here. Very much like the softwood tariffs on the United States or on Canada with the cheap lumber coming into the United States. It's the same scenario, just told a little differently with different companies and different product. Okay? At the national capital level, however, money talked louder. Goes on to say here, Hungary is one of the beneficiaries of the Financial Times, of what the Financial Times reported was a tsunami of transition investments across the world. Like this is happening everywhere. The Central European country, which is often at odds with the Central EU government, in Brussels hosts 2 South Korean battery plants, and EV giant BYD has picked it for the location for the first European factory. Poland is another beneficiary of Chinese transition investment. China's Leapmotor is now a new joint venture partner. Stellantis will build an EV factory there. So here it is. China's moving their stuff over to Europe. So if Europe's going to hit them with these tariffs on their products that they build there in their own mainland, they'll just send the manufacturing base over to that local area and produce it there and sell it void of the tariff. Right? Just like those big manufacturers of lumber from Canada moving here into the United States. It's the same thing. Now, one of the other, and I just wanted to report on this, show this to you guys, that this is going to get blamed on political action. Right? But we understand it from the Cantillon effect. We know that even from just the recent video that we had done, that if you go and read through Cantillon's essay, he describes this almost perfectly. Like what is actually taking place from the higher standard of living, the cost of manufacturing in that local area now not being competitive against the foreign nations out there. This is a very common situation that happens throughout the years, throughout the decades, hundreds of years, thousands of years. This is the way that it's rolled. But yet it's going to be easy to blame it on politics because politicians are the only people that we have to blame. It's very difficult to blame the economic force that is happening out there. Okay. Let me read through this a little bit more and then we'll move on. Meanwhile, BYD is also planning an EV factory in Mexico for the same reasons it is building one in Europe, the tariff push. Naturally, the tactic of setting up local production to beat the tariffs has raised Washington's hackles. Well, what would you think was going to happen? Like, do you think these people are just going to sit idle? I mean, does that seem reasonable that you're going to hit them with these tariffs and you're like, aha, suffer the consequences of that and you're not going to do anything about it? No, of course not. They're going to do something about that. Right? That's obvious. They're going to do something. U.S. politicians are now trying to pressure Mexico into being less hospitable to Chinese investors. Like trying to get the other nations out there, don't accept these Chinese manufacturers into your country. As Reuters reported in August, the pressure campaign worked too. I think temporarily it worked. For the time being it worked. With Mexican authorities refusing to provide Chinese EV investors with the incentive available to other car makers. Well, it may not be China, but somebody else is going to come in, right? So if it's not China, somebody will fill the shoes. with incentives to car makers. The problem, they could just take their business elsewhere, and that's exactly what China will do. They'll go to a place that's going to be cheaper to manufacture and get it to their customers. Now, ultimately, what it comes down to is that China is facing a situation in which that they have no real way of advancing the ability to bring new money in. See, this is the problem that they're going to face, because they have brought new money in from their manufacturing. They manufactured all these wonderful products, sold them out there to the world. They did this for decades, and they raised their standard of living. Now they are going to find it very difficult to bring in the new money. See, when the United States faced this consequence back in the 60s and going into the 70s, the United States and the world was sitting on a gold standard. Now, at that point, really, the United States should have redistributed the gold back out there to the rest of the world. Now, I'm not saying they needed to, like that's the political action that should have taken place. What I'm saying that needed to happen due to the economic forces that were underlying, that was dictating, hey, you have now run your course. You have manufactured all the wonderful goods out there, all the wonderful products. You did a great job of that. The whole world sent you the gold, the money. You're sitting on the pile of gold now, and other nations are going to start manufacturing cheaper than you can manufacture, and then you're going to have to redistribute that gold back out there to the rest of the world. That's how the economic cycles work. Now, when it came to that position, the United States was like, oh, hell no, we are not going to do that. In fact, we're going to sever ourselves from the gold standard, and everybody's going to have to deal with the fiat currency. They didn't like it. They didn't want to. A lot of them bitched. It came very close to losing faith with the U.S. dollar, right? It even got to a point during the Carter administration that they were actually issuing out U.S. Treasury debt that was due in Swiss francs and German marks. That's how bad it got with the dollar and the confidence behind it. Since there was really nothing else to use, the dollar ended up holding on to that position as being the world reserve currency and grew even more from that. When that happened, or as that happened, the government, the United States, in conjunction with the Federal Reserve, the United States was issuing out a lot of debt, and the Federal Reserve was buying that debt, issuing out a lot of liabilities, which is the dollars that we use. So the Federal Reserve would buy the government debt and then issue out the U.S. or the U.S. dollar, which was essentially their liabilities. This is what started creating the massive transactions around the world in U.S. dollars, is the United States was actually providing them with the dollars to do this through the debt issuance. Even though people didn't want to do it, they didn't have much other choice. So they went with it because there was nowhere else to go. Now, China sits in a situation very similar to the United States, in which that their manufacturing has run its course. Now, it's time to redistribute that manufacturing out there to the rest of the world, wherever it may go, right? To the most cheapest, efficient, skilled nation out there that can produce it cheaper and more efficiently than anybody else can. They are going to get the manufacturing base. Now, China is sitting in a situation in which the new money doesn't come in. Right? If you're not selling goods, you're not manufacturing and distributing out there to the world, you're going to have a problem bringing in new money. If you don't bring in new money, you're going to have a collapsing economy, which is what they are facing. So now, if you think about it, they have a couple of different options that they can go with. They're not good options, but they have a couple of them. And this strategic move started years ago. They knew this situation was going to come. China is no stupid. They're not stupid to monetary policies. They're not stupid to the economy. They're not stupid to history. And they're not stupid to the Cantillon effect. They know this, or else they would not have set themselves up so perfectly to deal with this sort of scenario. Now, one of the other things I want to leave for you down in the description is a link to something called dollar funding stresses in China. This is coming out of the Boston Fed itself. Right? And now this is the Federal Reserve. This was given a working paper November 1st, 2022. So we're talking almost 2 years old now. It's a little old, right? Not exactly to date, but the underlying issues that were happening within this document is still occurring today. Like, there's no difference. Now, one of the major problems that China is facing is that bringing in new money. bringing in those dollars. The dollar is the world reserve currency. Now, as much as the BRICS nations would love to abandon the dollar, there's nobody else out there that really provides what it is that the dollar can do. Like, nobody's going to trust US or trust Chinese debt like they trust US debt. Like, everybody trusts the US Treasury. They know it's the deepest, most liquid market, plenty of it available out there, can do world transactions with it, the safe and liquid asset. The only thing that China would have that's comparable to it is their own government debt, which everybody would be like, hell no, I ain't touching that stuff. I mean, some people might, but for the most part, the world doesn't want Chinese debt, right? They want US debt because US debt is guaranteed to pay. So the problem with China now faces is like, how do they get their new money in like the United States does it? Well, they really can't, right? They can't get the world to trust them to pay their debts back. They have to take on a different position. And so what they have done is that they have, well, you can borrow money in dollars, right? You can issue out Chinese government debt that is due in dollars. So you can sell that debt in dollars. It's due in dollars. This becomes very difficult if you have a hard time acquiring new dollars to pay back that dollar-denominated debt. So they could issue out Chinese debt that is due in dollars and bring in the new money that way. Or, all right, they can send their manufacturing base out there to the other countries out there, hopefully bring in some new money that way, as those manufacturers are still bringing in the funds to the mainland. Or they could take on another strategy, the Belt and Road Initiative. Now, this is where they have gone around the world funding infrastructure projects in Africa and places like Laos and just all over the globe, like everywhere, right? They have invested into infrastructure projects within these nations, and they did it in dollars. That means they need to get paid back in dollars. And this is the way that they have created a situation to bring new money in. It doesn't help the people themselves, right? But it does help the government. It does help the corporations. It does help the upper elitist as they continue to bring the new money in. But if new money continues to come in, it separates the rich from the poor, very much like we experience here in the United States. See, people wonder why we have such massive inequality. It's because we have had so much time with new money constantly pouring in, separating the rich from the poor. And this is the problem that China is facing. We don't face the same problem because we have debt issuance. We can bring in new money through debt issuance, hand out all these welfare programs, do all this, stuff to try and relieve the pain that people experience from the inequality. You have a higher standard of living because of it. You think about it, even the homeless have a higher standard of living as they, I'm not trying to say homeless is some luxurious life, but if you're talking on cell phones and drinking beer, there's people in this world who are truly homeless living in poverty. They don't get to drink beer. They don't get to talk on cell phones. That only happens when you're in a luxurious area that has a higher standard of living like the United States. And again, I know not everybody who's homeless gets to experience that, but there's places in this nation that truly experience hardcore poverty, not like we experience here. Dollar funding stresses in China. Now, I'm going to read from a little bit of this. I'm not going to read the whole thing because it's quite long. It's 19 pages long, and you don't want to sit here and listen to the whole thing. If you do want to sit here and listen to the whole thing, you can become a member of the channel. For $1 a month, you'll have access to member-only videos. We have covered this particular paper in a members-only video where we broke down the whole thing. So if you truly want to know what this paper says in its entirety, consider becoming a member of the channel. Again, it's $1 a month. You'll have access to all the YouTube videos that are member-only videos, and this is one of them that we have broke down. It says here, the need for U.S. dollar funding during financial stresses in the mid-March of 2020 as the COVID pandemic news shocked markets was evident in a number of countries. Notably, however, China's dollar liquidity needs received little attention. Not many people were talking about this. Given China's significant economic and financial linkages to the United States and the rest of the world, financial instability there could have implications for global economy. Hence, It is useful to develop a deeper understanding of the dollar liquidity needs of Chinese banks and non-financial corporations, and to probe whether existing avenues of dollar funding for banks and other firms in China are sufficient in times of stress. This is our objective. Ultimately, what they are saying is that these nations, or not these nations, China, non-bank and financial institutions have borrowed money in dollars. They have created contracts that are due in dollars. Now, this isn't to have anything to do with the United States. We have to remember that. See, people will like use the argument, oh, China will just default on that and screw the United States over. This doesn't have anything to do with the United States. We have to remember that. The only thing it has to do with the United States is the fact that they're using it in US dollars. But the contracts are written in Chinese government institutions, sold to whoever is willing to pay for it. Right? It may be the United States, it may not be. Right? And the fact that they have done this and that they become due in dollars means that they have an issue with trying to acquire dollars to pay back that debt. This becomes very difficult for them. When the dollar funding stresses start to hit, you will see a slowdown, a collapse in the economy. As one corporation is leveraged off the other ones. You get this contagion effect from it. Goes on to say this, and again, I'm not going to read the whole thing. I just want to read some of this stuff for you, so it'll encourage you to either go and become a member of the channel or go and read it for yourself. The link is down in the description. The dollar funding stresses that are abroad are instantly observable through the cross-currency basis, CCB, between the dollar and foreign currencies. For a given currency, the basis is the difference between the interest rate of the borrowing dollars directly and the interest rate of borrowing dollars synthetically by combining foreign currency borrowing with foreign exchange FX derivatives. If funding markets are efficient, arbitrage between these two alternative methods for borrowing dollars keeps the basis near zero. When access to dollar funding is stressed, however, and that was kind of complicated, but basically as long as everybody's trading equally, then it's cool. But the moment that there is a stress, like we have a hard time getting dollars, this is where the problem starts to occur. When access to dollar funding is stressed, however, the magnitude of cross-currency basis relative to the dollar can be significantly negative because of the balance sheet constraints of potential arbitraging banks. So ultimately, if they don't have access to these dollars, then they can't pay the debts, and those debts end up creating a contagion effect on other corporations and people who are then calling those debts their asset. And if they can't pay that debt, they're not getting their asset back. They start to lose as well, and their balance sheet becomes unbalanced, and they start going into defaults and problems within their own. All right. Again, I don't want to read through all this. I just wanted to give you some of this information because I think really if you truly want to read the entire thing, you should go and do it for yourself to internalize the information, or again, become a member of the channel and you can listen to us break it down. Heavy global reliance on dollar-denominated debt has been a phenomenon for some time. Non-U.S. banks commonly issue short-term dollar liabilities and did so even before the run-up to the global financial crisis. So they're talking about this from like literally almost 20 years ago now. Many non-financial firms in foreign countries also finance some of their activities in dollars. Again, this doesn't have anything to do with the United States. The dollar liabilities of non-U.S. banks have now surpassed their 2007 levels as shown in the figure 3. So again, there's, I can show it to you, but anyway, it's just this figure. Reproduced from the IMF 2019. Let me see here. Point to increase the extent. In 2019, point to increased extent of dollar borrowing by foreign entities, including non-U.S. banks, non-financial institutions, and operating companies. The outstanding quantity of dollar-denominated international debt security and cross-border loans is 26% of global GDP and is 50% of outstanding debt securities in all currencies. So you imagine like all the currencies out there that have issued out debt, or there's debt issued out in all kinds of currencies, not just US dollars. 50% of that is US dollars. Like, there is nothing else that even comes close to doing what the dollar does. This is where I think a lot of people are like very lost, especially when they take in the idea that the BRICS nations are trying to abandon the dollar. They can't. They literally cannot do that. Okay? And as much as they, say that they are and going to and making initiatives and trying and setting up the avenues of distribution that is outside the dollar is still far more significant than anything else out there. All right, I'm going to read just a little bit more, and then we're going to go and read some of the comments because I'm going to have to go back to work. All right. The dollar exposure is just the one I wanted to go through. Here we go. Okay, and this is the last part because there's so much information in here, guys. There is like it is overwhelming how much we could have talked about inside of just this one paper. But it goes on to say this. This is China's U.S. dollar exposures are growing. See, this is where I think a lot of times when we hear about the BRICS nations and how they are getting out of the dollar, abandoning the dollar, don't want the dollar, I I don't believe that's true. I just simply don't believe. I believe they want to. I think that they are setting up. They're attempting to. They're trying to do these things, but it's not working. It doesn't work, right? It's because there's nothing else out there. It's like saying, "Hey, I don't want to breathe this nasty toxic air anymore." And it was just like, "Okay, so what are you going to breathe? Nothing, right? There's nothing else to breathe except for this toxic air." Now you can go and sit in that room and breathe filtered air, but you're going to be in the confines of that little tiny room breathing that air. If you want to be out there with the rest of the world doing what the rest of the world is doing, you're going to have to breathe toxic air. That's the same analogy that's going on here. You have no other choice. This is it. There's nothing else to do. Right? And even if you wanted to, it doesn't work. Right? You don't believe it, just look at the transactions going between India and Russia when Russia sold India all kinds of oil and rupees, only to find out that those rupees didn't do them anything. They couldn't buy anything with rupees because nobody out there in the world wants rupees. Only India. And so India was just like, well, what do you need us to make for you then? We can set up more manufacturing here. They don't want to do that. They want their products to be efficiently sent to them from the world that the world has to provide. But the only problem with it is that the world doesn't want the rupees. Right? It's a major issue. All right. Going on here. China's U.S. dollar exposures are growing. Although we are unable to obtain an all-in picture of dollar funding exposures in China, given the incomplete available information, the trend toward greater U.S. dollar borrowing and lending by Chinese entities is unmistakable. They are lending this money out there to the world. They're doing it in a massive way. Right? Moreover, this increase in dollar exposures has been faster in China than in the rest of the world. China is special in this way, partly because of the faster growth and demand for credit by Chinese firms relative to the rest of the world, and partly because of the expansion of the Belt and Road Initiative, under which lending in dollars is preferred by both China's lenders and the Belt and Road Initiative borrowers. They are choosing to use dollars. Right? Within this, again, this document is only a couple of years old. The idea of the BRICS nations has been going on for decades. And the idea of them getting out of the dollar is not very likely when they have so much dollar-denominated debt that's out there. Further evidence, I'm going to read this last part and I'm going to call it quits. Further evidence of China's growing Further evidence of China's growing use of dollar funding in expanding is the expanding reliance of Chinese entities on foreign exchange swaps. The increased use of derivatives, especially foreign exchange swaps, which underlie the cross-currency basis, is evident from the data from the data on derivatives turnover in the BIS triennial surveys. And this shows. So again, I know this stuff is really difficult to wrap your head around, but ultimately the idea that China is figuring out a way to swap into the dollars, right? Figuring out all these different channels and reliance upon that is the issues that they are going to be facing going into the future, as the ability to do that may get limited, therefore denying them the ability to move those dollars into their nation again. All right, I'm just going to leave it at that, and we're going to talk just a little bit as we are 30 minutes into this, and I have literally 5 minutes to get back to work. All right, so I hope this was a helpful, video. I know it was really complicated. There's a lot going on inside of it. But if we take back just a minute and just say, okay, we can blame it on politics. We can blame this, all this decisions that were made by all these different nations out there, all these different governments and all this stuff. Okay, now that we got the blame out of the way, let's look at the underlying economic force that has now forced them into making these decisions. Like, why is it that the United States exported all its manufacturing to China? Now China is exporting its manufacturing out of China. Why? Is it a political decision that is being made here? Or is it the underlying economic force that is causing this to take place? Cantillon described it hundreds of years ago, right? So if we can find evidence of it being described hundreds of years ago, we find it taking place within our own nation, we see it reoccurring in another nation as it starts to happen, right? Again, is this the underlying economic force that has taken place, or was it a political decision that has caused this to happen? I mean, Cantillon didn't know about what China was going to be doing. He didn't know about cell phones and airplanes and any of that other stuff, but yet he could describe what would happen if a country has increased its manufacturing, increased its standard of living, and then is no longer competitive against the rest of the world out there and their manufacturing base. That's the real issue. And so when people are looking at it saying, oh, it's a greedy corporation, if they weren't going for all the profits, that's not it. That's not it. You have to go for profits. If you're not a greedy corporation going for profits, then you wouldn't exist. Would you work for no profit? Of course not. Why would a corporation work for no profit? That doesn't make any sense. It's not their greed. It's the underlying economic force. We made more money as an individual. We took that money and we bought new houses, new cars, new clothing, ate nicer food, got cell phones and TVs and all the other stuff that raised our standard of living. We didn't have to do that. We could have made a decision that says, no, I'm not going to increase our standard of living. Does that sound natural human behavior? Of course not, right? The natural human behavior says, I worked hard, I acquired this means of being able to raise my standard of living. Why wouldn't I do that? Of course you would. That's why you work hard. But that is the exact action of raising your standard of living that makes it so that the manufacturing base of that nation is no longer competitive against another nation out there that says, hey, our standard of living ain't that high, and we can produce that same product. And there's no way you're going to be able to compete against that. China knows it. That's why they have invested in nations all around the world to build up their infrastructure projects. As they begin to rise and start to pay those bills back, they're paying back in dollars. That's new money coming back to China. See, they know that the manufacturing base is going to leave. They have to. And if they don't bring in new money into their system, they are going to suffer in misery and poverty. Doesn't sound like a very good time. If they don't bring the new money in, they will fight, because every nation does. All right. Uneducated Economist. You guys let me know. Links are down in the description.